Thank you for joining us for our webinar entitled Short and Long-Term Financial and Tax Strategies for Medical Practices During and After COVID-19, an Operational Approach. My name is Susan D'Antoni, the Executive Director of Montgomery County Medical Society. This call is being recorded and will be available on montgomerymedicine.org later today so you can re-listen or share with others in your practice. A few reminders and housekeeping items before we begin. Montgomery County Medical Society and MedChi are here for you during this time. As a service to all physicians and their practices, we have been sending out communications to everyone regardless of whether the physician or practice administrator is a member. Our team is available to respond to your questions about stimulus packages, PPE, and more. Our websites are regularly updated with regulations and resources. And again, that's montgomerymedicine.org or medchi.org. Also, we have additional webinars in the planning. One which will focus on the issues related to readying your practice for seeing patients again, including the regulations at the local, state, and federal level. In addition, Montgomery County Medical Society is working on a readiness kit, which will help practices to assess their readiness in terms of patient and employee safety. We encourage your participation also in the Dr. Haft Maryland Department of Health calls, which have been very helpful to keeping informed about COVID in Maryland. The link to these calls can be found in the email that you received from MedChi, and they are also on our website. The calls are Monday and Wednesday at 5 p.m. and on Friday at noon. So let's move on to today's discussion. We have muted participants at the beginning of the call for sound quality purposes. Following the presentations, we will take questions first from any which have been submitted via the chat function in the Zoom platform. Then we will take any questions from participants who are on the phone. To unmute yourself, press *6. Today, our featured presenters are our longtime colleague, Maureen McCarthy, CPA, Principal and Managing Director, and Trey Gailey, CPA, Principal, both with KatzAbosch. KatzAbosch provides high-quality accounting, tax, financial, and management consulting to their clients throughout the region. Our speakers are providing the best information they have at this time. We know it's a fluid environment, and we will continually update you on the progress that's made on the topics today. We welcome Maureen and Trey and look forward to their presentations, and then we will take questions. Trey will speak first. Trey, we welcome you to begin.
Thank you, Susan. Hello, everybody. Hope you guys are all staying healthy and well. Same for your families during this trying time. Things are ever changing. So just as a preliminary statement, we at KatzAbosch, Maureen, myself, and all of our colleagues have been staying on all of the information up to the minute as it becomes available. As you can imagine, and as you probably know, things are changing every, not just day, but hour, minutes. It's nonstop research, and we're doing the best that we can do to provide you the most up-to-date information. You will find our contact information at the end of this in the Q&A section. Please always feel free to reach out after this personally via email or telephone. Just as a brief background of myself, I am a principal at KatzAbosch. I am also a director of accounting services for our wholly owned subsidiary, Bluestone Services. We have our own payroll company, and we handle full back office operations for all different types of industries. We have a big presence in the medical practice community to help out with practice administrators.
Mr. Young, this is Dr.
Okay, so Kelly, if you want to go to my first slide, we can get into the fun stuff here. So this is all about utilizing the government programs that are out there. As many of you, if probably not all of you, are aware of the PPP loans. So the big popular thing right now on all the media, you know, all the literature you're reading, and they're very recommended loans. The one thing you have to do for this is attest to economic uncertainty. There's a lot of literature coming out here recently and some things that are scaring some clients that some banks are sending out as recent as April 28th. some stuff came out to where, you know, any loans that are very sizable, over $2 million, might be reviewed a little bit more granularly than, you know, a normal loan. Just to start off, before we get into the details on this, because most of you are probably aware of the PPP loans, we at KatzAbosch are taking it along the lines of, as long as you have proper documentation, which is just economic forecasting, cash flow projections, that's more than enough to show your economic uncertainty. So we just wanted to start with that. So I'm sure you've heard about the PPP loans. They're very friendly loans administered through the SBA. The first $349 billion ran out. So hopefully, if you didn't get in on that tranche, the next $310 billion is now currently being processing. The SBA is really controlling the pace of this, and a lot of institutions are having issues, and the system is kind of being restricted to, for example, all lenders are only allowed to apply for 350 loans per hour. So they're doing this on purpose to make sure that it doesn't crash like it did the first time and everyone gets their equal chance. So the main thing on the PPP loans is that they are fully forgivable if you use them for eligible costs. The kicker is you have to use them over an 8-week period from the time that the funds are dispersed. So the eligible costs for these, if you're not aware, are payroll costs, rents, utilities, and any interest on loans or debts originated prior to February 10th, 2020. So payroll cost sounds like, you know, it'd be easy, but it's not as easy as it sounds. So there's a couple restrictions just to make sure that you're aware of. Each employee is capped compensation only, not additional add-ons that we'll get into, but compensation is capped at $8,333 per month per employee. So they're annualizing that on anything in excess of an annualized $100,000 salary per person is not eligible for forgiveness. The forgiveness we'll get into a little bit more with what we know now in a future slide. So this is more of just an overview on the PPP. The big thing with the PPP, though, is that what it's doing is incentivizing you to keep your workforce in place. So one of the big tests, again, that we'll get into a little bit more is your FTE count at the end of the period, or by June 30th, I should say, and that you're utilizing 75% of the funds for payroll costs. And again, we'll get a little bit deeper into that here in a second. Next is the economic injury disaster loans. So these are also administered by the SBA. These are not quite as friendly as they're not forgivable. They do have very friendly repayment terms, up to 30 years in some cases. Some of the downsides of this is, one, it's not forgivable, and two, it needs to be personally secured with collateral if in excess of $25,000. I'm sorry. One plus on this is that as soon as 72 hours of the application being processed, they're advancing a non-repayment $10,000 grant to be used for any kind of working capital that you may have. State grants. So by now, most of those, if you didn't have the opportunity to get in there for the grants, the $10,000 Maryland Small Business Emergency Relief Grant, it's up to $10,000. It can be used on any kind of working capital not repaid. There's also, and speaking of Maryland COVID emergency relief, there's also a relief loan fund, which is not a grant, but the threshold is not $10,000, it's actually $50,000. The thing for this is both of these are 50 employees and less. So that's something that will restrict some of the more sizable practices out there. Finally, we have the stimulus funds. So you've probably all received your HHS first round of stimulus funds in the most previous weeks. And as you know, this is based off of your Medicare base, and most of you have already used those funds. The big thing to focus on with these is that it can be used for any kind of working capital. Just as a note, we're recommending, Maureen and myself, to our clients to set up separate accounts for each of these loans. So let's say you get a PPP loan and you get these stimulus funds. It's very helpful for tracking to set up two separate bank accounts at your institution that you're getting your funds from, because for the PPP and the stimulus funds, we really don't want to commingle them because that's required not to do so. The PPP loans need to be tracked very closely, and used only for those eligible funds. So another thing is these stimulus funds can be used. These are being given out to keep your practice afloat and make sure that you're ready to reopen when the time comes and you're able to, fully satisfy your patient's needs. And the big thing is any patient can be considered a COVID patient at this time, a possible COVID patient at this time. So this is applicable to your full client base and all kinds of services. And the big thing on this is to keep you guys afloat until you can go live and things start ramping back up. These are be able to use for any kind of working capital, not just those PPP restricted uses. So Kelly, if you want to go to the next slide here. So as I promised, we'd get a little bit more into the loan forgiveness for the personal or for the payroll protection program loans. As I stressed, there's a lot of guidance still coming out and there's still not final parameters set on the forgiveness, but there are some things that we can, give you that's helpful information on what we're thinking and what our colleagues are thinking and some fellow firms. So on the forgiveness, the big thing is, let's just use $100,000 as an example of a payroll protection program loan that you get. So in that 8-week period, you have $100,000. The first thing that we're certain on is 75%, so $75,000 of that has to be used on eligible payroll cost. Payroll costs do have that $100,000 annualized salary or straight compensation per employee threshold. However, there's additional payroll costs that are in addition to that. So if someone's making $100,000, they're capped at $8,333.33 per month for salary. But if you're for the employer portion of medical, health, dental, vision, etc., those are added cost, as well as if they're doing 401k match, an employer pension profit sharing match, anything of that nature, that's also additional cost. One other thing that's included, unfortunately, FUTA taxes are not, or FICA tax, but SUTA, so state unemployment and other local applicable taxes that the employer is responsible for, those as well are included cost. So some of the other costs that can make up that other 25% of the funds are your rents, utilities, and interest on any kind of debts that are originated before February of 2020. So the big thing is a lot of you guys, and rightfully so, are trying to get rent relief, and a lot of the big medical carriers are offering 2 months of medical premium deferrals. One thing you want to keep in mind if you get this PPP loan is that to make the most of this, while it is helping you in cash flow, getting the deferral, it might make sense in a lot of cases to pay those premiums with these funds to maximize the forgivable amounts of these funds that you have. Because each of those medical premium bills that you're paying, you can use out of this PPP fund and use it as towards your eligible forgivable costs. So that's one thing that you guys would definitely want to think about and should think about. So again, the loan forgiveness tool, so a big questionable area here is if you don't use 75% of the cost, are you able to forgive anything? Or is it, pro rata based on if you use 75%, are you restricted to a lesser amount of forgiveness, or is it no forgiveness at all? So we're taking the approach that doesn't make sense. We think it's going to be a pro rata portion. So if you only use $60,000 out of that $100,000 for payroll and the other 40% was for utilities, rents, etc., we think you're still going to get a good portion forgivable, and it's not all or nothing like some of these calculators out there are doing. But again, the government loves to surprise us. So, we're hopeful that that's not the case. So some of the tax credits, just jumping into the next bullet here, are the payroll tax deferral options. So one thing you can do here is, and one big note to make is you cannot double dip with both the PPP and this payroll tax deferral program. So if you can't get the PPP, whether you're not eligible or unfortunately you just miss out or can't deem or feel that you can certify economic uncertainty, but I'm sure most of you can, there's the payroll tax deferment, where your payroll taxes for the remainder of 2020 are deferred and paid equally, 50% due by the end of 2021 and the remainder due by the end of 2022. So this is definitely an area that you want to look into if you missed the boat on the PPP for whatever reason. Some of the other tax implications that we're seeing thus far on the business side of things are the net operating losses. Originally in this year's tax code, they were trying to prevent carrying back your NOLs to the full potential and only 80%, et cetera. So there's a lot of detail on that we can certainly give you more on, but going forward, you're able to carry your net operating losses back 5 years. So this is a big deal because, a lot of practices and businesses are likely going to see, if not just significant less net profits, they're going to have losses that they can then carry back and apply to prior years and where they paid a lot of tax on higher income amounts. So this is something that you would definitely want to reach out to your accountant or ourselves if you don't have the right person that you want to chase down on that. So those are some of the big tax implications. Again, you cannot do both the payroll tax credit and the PPP. You can't double dip like that. So it's either one or the other, and obviously the preferred would be the PPP. So if we want to jump into the next slide, Kelly. So we have all the government programs and stuff, and that's great, but really we need to plan on preserving and projecting our cash and liquidity, both, now and out 6 months when things start ramping up. So a cash flow projection is very necessary always, but really right now in this dire strait. So we don't want to just focus on now when things are somewhat ceased and you're relying on telehealth where you might not have been, and obviously your patient visits and services are significantly down right now. So we want to look at 3 to 6 months out. We want to estimate the best approach on when do we think things are going to start ramping up. I know the stay-at-home orders need to be released and some of the other, government mandated requirements and thresholds right now, but, your guess is just as good as ours. We were having a conversation before this, and a lot of people are targeting that May 15th date. That sounds reasonable, but, as each day of, unfortunate fatalities and new cases comes out, Hogan seems to, be on that side of really having caution and not feeling the pressure of the national governments and some of these other states that neighbor us in unleashing the floodgates here, opening the floodgates, if you will. So preserving cash is a big thing. This goes hand in hand with, the last bullet point really. So to preserve cash, we really want to, one, be looking for these government programs, but as well as, mitigating our costs. So reaching out to your landlords, like I mentioned, medical carriers are really participating in this deferral, usually 2 months or so. A lot of your current existing debts, a lot of the institutions are allowing you to forgo 3 months of payments and, interest to stop accruing. So those are all things where we can preserve cash. We'll get more into the payroll side of things and how we're paying our folks and keeping them, on board and bringing them back, et cetera. But, that's a part of preserving cash. We've seen a lot of practices and actually recommended for those that get the PPP loans, whether it's a 20% cut across the board. So you're paying 80% of your payroll costs to where, based on your average payroll, what, the maximum loans being calculated on, we see that 80% of their usual pay is a good number to really target to where you're keeping everybody on board. They're not having to file for unemployment. We'll get into partial unemployment here in a minute, but, you're keeping everybody there on your benefits. It's a part of the team. It's more of a team approach. If all the physicians and everybody are taking that 20% cut, just like the admin, the office managers, practice administrators, that's a good look and a good thing for the culture. So that's some things that, if it makes sense for clients, we're really recommending. So right sizing expenditure. So match your resources to the volume. So this is really looking at, okay, you might not need that same amount of level of service you're getting on some of your vendors as you would when things are running, full stream ahead. So those are other things to consider. And the deferral of expenses, we kind of hit on this in preserving cash. The main areas are your big expenses. So your rents, your other recurring maintenance contracts, if you can get a hold on those, and any of your current debts, not expenditures, but debts that you have in place. Again, a lot of banks are giving you at least 90 days. So the big takeaway here is essentially, for lack of a better term, is hoard all of your cash until you have to spend it. So unless a vendor really has the feet to stand on and really get aggressive with you, even landlords, if you can just push them off a little bit and just make sure that you're getting some of this funding and making sure that you're doing the best that you can do for your business to survive and be as strong as it can be when things go back to live. So those are the main takeaways here from cash and liquidity planning. Okay, Kelly, if you could go to the next. So our sources of cash, we have, obviously our insurance and our patients and our past due AR, they all kind of go together here. So there's not a better time than now to really follow up on some of your past due ARs. Maureen and I were talking, there's a lot of jibber jabber out there that a lot of folks are reaching out to patients and they're actually collecting on past due debts, whether the patient was unaware or just didn't receive the statement. They're giving them their credit card and they're allowing them to charge them for their prior dated services. So now, there's a lot more downtime, obviously, for the administration and a lot of the staff on board. So now is a better time than ever to really pursue these past due ARs out there for the services. So, and your insurance carriers, make sure that your billers, if you use external, internal, make sure that you're really making sure that you're getting paid for the services that you're doing. I know with working with a lot of practices here lately that the telemedicine and the collections, there's a little bit of a lull here into where things are really starting to come in and you can see that consistency of what you might be getting for your telemedicine and what to project out on. I work closely with some pediatricians and stuff. And, if there's any pediatricians on the line, I know Maureen and I are really looking into programs because, obviously you don't have a Medicare base and you're strictly, you might be Medicaid if you're in a certain area, but you're definitely not usually Medicare heavy. So unfortunately, you've missed out on both the first and the second tranche of the HHS, and pediatricians specifically are some areas that are really neglected right now. So, we're looking into all that for you. If any pediatricians out there want to reach out to us, just let us know, to look for you, keep you updated. We certainly will. So that was just a quick thing for pediatricians because I know they're underserved right now. Going into loans and grants. So, again, you really want to separate your loans into different bank accounts if possible. Is it required by the SBA or any of these institutions? No, but it does keep track accordingly. So for the PPP, the big thing, after your 8-week term comes up, your recovery period, they're calling it, you're really going to need to have documentation and be able to track what you're using these expenses on. Surely payroll will be a little bit easier than some of the other areas where you're going to be able to provide a payroll register and a bank statement showing those funds coming out. So a lot of that support will be fine for those. So the grants, it's also good to keep those separate because really we don't want to commingle them with any other kinds of loans or funds that we're using. However, a lot of the grants are really a little bit looser in the use for them. They're able to be used for any kind of working capitals. They're not restricted to just, occupancy and employment stuff. So they're a little bit more loosely held and they can be spent for any kind of working capital and to keep you guys ready to go when things open back up. And that leads perfectly into the stimulus funds because as we mentioned on those, economic uncertainty is certified and attested to for all of these. And I mean, for any industry out there right now, other than some others that are really, killing it for the lack of a better term, due to the unfortunate circumstances and taking advantage of the opportunities, these stimulus funds, with all this other stuff, you can definitely attest to economic uncertainty. Us as a firm, we're fully operational. We're considered essential. We're all working from home. But for example, us and a lot of firms, we're taking advantage of stuff and attesting to economic uncertainty as well, because, who's to say what collections are going to look like? Yeah, we're still working and working away at tax season and stuff, but, collections could be an issue for us, when things start getting back going. Some vendors like ourselves and all might be on the back burner where more essential services for you guys are going to be the priority. That's just, the nature of the business. So extending terms from your current vendors are a big thing. I know a lot of, the medicinal vendors like Sanofi and Glaxo, You know, a lot of them are offering terms that are a little bit longer. They're not assessing late charges. At least this is what we're seeing off of our client base. And there's a lot of other vendors that you rely on, and they're a necessity for your business to keep operating. They're kind of laxing off and understand tough times that everybody's having. So they're usually working with practices. Okay, if we want to go into the paying for staff. So layoffs, furloughs, and terminations. One thing we want to make sure that is known here is we don't want to keep people on board if they're not doing anything full time, just to satisfy some of these, you know, programs in place. A big thing with the PPP loan is, for most of you, it was going to be based off of your FTEs and your, you know, payroll averages for the calendar year of 1/1/19 through 12/31/19. There are other measures, but that was the most commonly one used. The big thing here is, even if you lay folks off, yeah, you're spending less on payroll, but if you can bring them back before the end of your 8 weeks, specifically by June 30th, 2020, if you can get your FTE count back up to where it was, that's okay for the PPP. That's not going to hamper your forgiveness. It's not based off of your average over the 8 weeks. If you can get back to that FTE count, you know, pretty close to it, or at least at it or more by June 30th, you satisfy that requirement from the guidance that we've seen for the forgiveness. Again, keep in mind that forgiveness is a little subject to change. Unemployment while on PPP. So, you know, as we kind of talked about, you could do, let's just say you do a 20% slash across the board. There is guidance on Maryland's Department of Labor on their frequently asked questions section. So, for example, if nothing that I did, or, you know, none of my actions caused my pay to be cut by, let's just say, 20%, am I eligible for partial unemployment? The easy answer is yes, but there are certain things that might make folks ineligible, but they really don't share their details and what they're really looking for. Unfortunately, it just says, you know, please either apply online or call, you know, and then they'll go on it by employee basis. So partial rehire, again, so if someone was laid off and you want to bring them back part-time, you can. You know, really, it would be good to get them considered as an FTE for, you know, obvious reasons with some of these programs that you're working with. So really a 30-hour per week average. But if not, that's okay. It still counts towards your payroll cost, and they can still get partial unemployment if they're brought back at a lesser capacity. So those are some things to keep in mind. So rehiring staff and timing. So we'll kind of work these in all together with the last 3 bullet points, because, you know, there might be a need to give hazard pay out there. The good thing is, you know, that's fully fine and applicable for PPP, as well as a return to work bonus. So as long as you can substantiate a bonus and what it's for. So this is pretty easy. I mean, if someone's not over that $100,000 threshold already, and you want to give them a bonus to make it more appealing for them to come back, because let's face it,
I'm just listening.
Some may have, you know, the fear of COVID being out there and becoming infected, or, you know, just returning back to work and seeing patients. This is a little bit of something that you can do to both incentivize the employees to come back and be a little bit happier to come back, as well as increase your costs for these other funds to get forgiveness. So the hazard pay and the bonus are great options for that. Obviously, if someone's already fairly highly compensated and making 6 figures on an annual basis, this might not be quite as advised, because they're going to be excluded from the forgiveness anyway. Big takeaway here is, don't keep people on and feel like you got to pay them to essentially do nothing, or a lot, significantly less, I should say, than what they're typically doing in a fully operational mode. So the big thing is, once things start ramping up, you can start bringing them back on either completely if they've been completely furloughed, or, you know, start bringing them back at a higher rate of their, you know, full capacity. So there's a lot of different things you can do with your staff here, and to keep them happy and keep that culture strong. But the last thing you want to do is just pay people to pay them to, you know, please these government programs. Worst comes to worst, you know, if it's always best to think it's going to be the worst, right? So hoard that cash. It looks like you're piling up cash, but it's better to play it safe than sorry, and fully utilize these PPP funds if you're fortunate to get them. And if worse comes to worse and you have good liquidity at the end, while there's 6 months deferral and then it's only at 1% interest on the unforgivable amounts of the PPP for 2-year repayment, I mean, that's almost the same as free money essentially. But, if your liquidity is good and you make it through this and things get going pretty quick and you don't need those unforgivable funds, you can just pay it all back essentially interest free at the end of your 8-week period. So there's a lot of rooms for cash management out there, but really be as cautious as you can, because clearly there's a lot of economic uncertainty, and I feel like anyone could substantiate that. So in all the literature that you see, and banks are starting to kind of not so much scare people, but just make it known, like, look, if you really don't need this money, we don't want you taking it. We want those folks that can really utilize it and truly desperately need it to have it. That doesn't mean you shouldn't apply it if you're not as bad off as other people, because we all have economic uncertainty, all industries. So, those are just a few things on keeping your people happy and bringing them back, and some of the opportunities out there for the folks. If you do a, let's just say 10 or 20% slash across the board, there are benefits out there to help them get closer to their normal pay. So, okay, that's good for this one. So let's see here. This is going to be where Maureen begins her presentation in more of the, medical practice reopening plan. So the floor is yours, Maureen.
Looks like she's muted. There we go. I got my microphone on. So thanks, Trey. That was great. That was really great information, and really, I think, helps everyone to understand, what they need to be thinking about, which right now is so important. It's a real pleasure to be with everyone today during this really difficult time. As you probably know, if you've heard me speak for the Medical Society before, I've pretty much been in healthcare my entire career. I am a CPA, but supported my way through college doing medical billing. So have pretty much been in medicine my entire career. I recently joined KatzAbosch as the director and principal of the medical advisory services. And it's a great time to be at KatzAbosch because we can offer a lot more value to our clients on the advisory side. So the first thing I'd like to talk about today is the importance of mapping out your reopening plan. Because right now, practices are saying we're going to be ready to reopen on May 15th. But to be honest with you, every day we listen to Governor Hogan, who is really doing a great job, in my opinion. And he will say, yes, we're shooting for May 15th, but we really think it might be May 31st or June 15th. So really keeping an eye on that, but having a plan in place for when it is okay to reopen your offices to see all patients, not just COVID patients and very sick patients. The first thing you really want to do, and this is difficult, but if you kind of get all your folks together, your doctors, your administrator, your billing, all of the people that are involved in the work office process, and really sit down and talk about what you think your estimated volumes are going to be. You may only be able to see half of the patients or a quarter of the patients that you are used to seeing due to social distancing and trying to split your days between well patients and sick patients, and really trying to keep the COVID measures in place that we've all been following so far. So sitting down with all the people that are involved in the process and starting to project out your volumes. You may start at 25%. You may think you can grow to 50% in the first 3 to 4 weeks, and really kind of looking out 3 to 6 months, and then also talking about what resources you're going to need to accomplish the volume projections that you have put down on a spreadsheet. So as Trey said, you may not need a full complement of staff right away. And to be honest, staff may not want to come back full time right away because they're worried. They're nervous about their own health, about taking it home to their families. So really kind of trying to think through all those things and plan accordingly. You're going to need to kind of think about how you're going to deal with the pent-up demand. There's a lot of patients who have not done their follow-up visits, whether they didn't want to do a telehealth visit or whether it was really a visit that was more appropriate to be face-to-face. So you're going to need to figure out how you're going to get all those patients in, get them seen, and check their treatment plans and make sure everything is going well. In addition, I know there's a lot of elective medical services that have been put off. It feels like that's easing a little bit now, but even elective services that you do in your office, you're going to need to kind of map out how you're going to do those, how you're going to schedule those patients, how you're going to prioritize which patients might need to get in first versus which patients could probably wait a little bit longer. I know on the primary care side, especially on the pediatric side, a lot of some practices are doing well visits by telehealth, some are not. And so how are you going to catch up on all your well visits and your vaccines so that we can keep these kids up to date on their vaccines and get them back to school when school reopens? And whether we'll have sports in the fall, who knows, but they'll also need to have physicals for those things. One practice that I talked to, and I'm not going to mention their name, but I'd love to give you credit. They're going to plan to do an entire week of well visits to get everybody caught up. They're going to have late hours. They're going to do Saturdays, and they're going to really kind of get all their patients in to catch everybody up, which is a great idea. And I'm sure that providers will be willing to do that so that they can, kind of jump back on track and get their revenue going as well as their patients' well visits and vaccines taken care of. I think right now, the biggest thing that I would encourage all practices to do is communicate. Communicate to your patients, communicate to your employees, communicate to your referral sources and your vendors to really let them know what you're doing. Let them know what your plan looks like. Let them know if there's been a change to a plan that you've already spoken about, but really, really get that communication going, whether it be by email, phone call, get it on your website, social media if you have accounts for that, but really getting in touch with everybody so that everybody's in the loop on what the plan is for opening each practice. And to be honest, I think we're all going to come out of this COVID stronger. I have been accused of being an eternal optimist, but I really do believe we've learned a lot during this COVID period. And I think that medicine's going to change because of the things that we've learned and maybe some of the electronic processes that we've put in place. Nobody doesn't know how to use, that's bad English, excuse me, but there's no one out there that doesn't know how to use telehealth right now that's in a medical practice. So that's a good thing. We can now utilize that in a better way. And I think patients are really going to want to continue to have that option available to them as well. So Kelly, next slide. KatzAbosch and medical business advisors have spent a lot of time working on telehealth, telephone billing, and coding, not only with Medicare and Medicaid, but also with all of the larger commercial carriers. We have published some grids as far as what codes you should be using for telehealth, for telephone calls, telephone phone services, and what modifiers. And again, as Chad said, this is not a weekly thing anymore. This is a daily thing. We're getting emails from payers at 8 o'clock at night saying, from now on, I need you to use this modifier. I need you to use this place of service. So KatzAbosch has a really wonderful COVID resource section on our website that I encourage you all to go to look and see if there's some answers in there that you've been looking for. Because really the coding requirements have been constantly changing. And if you submitted your claims using one set of rules, one set of modifiers, place of service codes, it is possible those claims haven't been paid because they changed the rules the day you submitted them and you weren't aware of that. So you really want to make sure that you're on top of that and that your claims are getting paid. In addition, documentation requirements are a little bit different with telehealth services versus being face-to-face with a patient. So making sure that your providers who are seeing patients, whether they be physicians or mid-level providers, making sure that their documentation is up to speed with in case of audit. I don't know if the insurance companies will use this as an opportunity to audit practices and kind of ding them on the documentation. I hope not, but we never know. And you really need to make sure that you're documenting as well with a telehealth visit as you do with a face-to-face visit. In addition, some of these codes are time-based, so it's important to make sure that you are recording your start times as well as your end times. It's important to put notes about what you talked about and maybe why you had to use the time as your coding factor instead of a code level. If you're counseling a patient, which I know you're probably all doing a lot of counseling right now, make sure that you say that, 40 minutes was spent counseling a patient on the following, and really outlining that in a clear and concise way so that if there is an audit, you can defend the billing that you sent out. Remote patient monitoring, this is a big area that I know a lot of practices have had to use as to look after patients with chronic illnesses, to measure certain things, to monitor certain things, to make sure their blood pressure is in check, and to make sure that other things are being monitored, because chronic patients are not necessarily wanting to leave the house and do a face-to-face visit. So that is a billable service, and it is something that I encourage all of you to look at to make sure that you're using the codes that you can get reimbursed for. Tracking, as I said a little bit earlier, really tracking your telehealth visits and your telephone claims for follow-up. If you've got a large batch of claims that you sent out a month ago and none of them were paid by a certain payer, I encourage you to look at those claims, look to make sure that you were using the correct modifiers and place of service codes at the time, and resubmit those if they haven't been paid, and it looks like you might need to update the coding that you used. Another area that I think is very confusing for some practices is, what is the patient's responsibility for copays, coinsurance during COVID? One of the things that came out kind of really strong from the government is that they didn't want anyone to not go for medical services because they were afraid of what their balance was going to be or what their patient responsibility was going to be. These rules really applied to COVID patients. If a patient has a COVID diagnosis, they, in most cases, are going to be relieved of their patient responsibility for the service. It does not include patients that come in for other illnesses. Now, they may come in thinking they have COVID, but what they really have is a sinus infection. So that patient responsibility doesn't necessarily relieve them of their copay in those circumstances. So really making sure that you are collecting from patients when you are able to do that. And I think that probably, and it depends on what kind of practice you are and what kind of patient base you have, but I would say 95% of your patients are probably not COVID diagnoses. So making sure that you're collecting those copays, because that is the money that you need in your bank account to really keep up with your expenses right now for the services that you're rendering. Another area that we're a little bit concerned about is whether the payers are paying as promptly and efficiently as they have been in the past. If there are large batches of claims that are aging now because they haven't been paid. So really keeping an eye on your insurance AR and making sure that you are either following up on claims, resubmitting claims if you need to bring that cash flow in, because it's obviously more important than ever right now that you bring in as much money from the payers as is due to you. You also have a lot of employees that may be sitting around right now, and if you could teach some employees, non-billing department employees, how to follow up on AR, patient balances, as well as insurance balances, you can fill their time. Because employees, as much as we want them to be busy, they want to be busy too, because they don't want to be sitting there in their mask in the office all day long doing nothing. So I think this is a really good time to clean up your AR and to, you know, work the accounts that you can and get that cash flow in. I've had some practices tell me that they've been doing this and have actually been quite successful in bringing in additional money. So next slide. So potential pitfalls. You know, a lot of practices came to the party a little bit late because they just weren't sure what was going to happen after COVID hit and stay-at-home orders were put in place, and they didn't, it took them a little while to kind of get new processes in place. Applying for government programs, you know, a lot of our practices waited too long to apply for the state grants. They waited too long to apply for PPP and now have their fingers crossed because they're hoping to get in the second tranche of PPP funding. But really kind of keeping your eye on all the government programs that are available. There is a website that I think it's Relief Programs, and I can get you that website where all of the new programs and new grants are put on there every day. I know there's a Baltimore County grant that just came out that I know a lot of practices can apply for. We at KatzAbosch are trying to get this information out to our practices on a pretty regular basis. Again, look at our resource page, and that's a good place to really check to see whether there's additional monies available to practices, you know, to help them through this difficult time. The other thing that I think is a pitfall is going back to projecting your cash flow, projecting your expenses, kind of looking at your volume and trying to assess how fast you think things might come back up when we're allowed to reopen offices. I think it's important to look at this week. I think it's important to look at the next 2 weeks, but I think it's crucially important to look at the next 3 to 6 months, because right now there's a lot of government money that is going into practices' accounts, and you need to make sure that you're budgeting that money, because once June 30th hits, all of that money may be gone. We don't know if the government's going to come out with some new programs for small businesses, but you may have to live on the money that you're receiving right now for quite a long time. So really trying to project out what kind of money do you have available to you, what expenses do you have, how do you meet your obligation under the PPP loan, how do you meet your obligation under the stimulus loans or money, and, you know, kind of seeing where would you be in July if you used up all that money before then. The other thing is waiting too long to make changes. So, you know, I know that a lot of practices kind of had a brief period where they were paralyzed and they weren't able to jump onto telemedicine right away, maybe because they didn't have the software, maybe because they had software that was inadequate for the volume of telemedicine work that you had to do. And so, you know, that's just one example of really being able to jump on things, be very proactive instead of reactive, and making sure that you can take care of your patients in alternative ways under the current circumstances. Next slide. Trey touched on this, really efficiently utilizing employees. So right now we have a lot of employees that have been kept on, or they have been kept on at a percentage of their normal workload, but they really don't have anything to do. So really, as we start to go towards a reopening, hopefully in the next, you know, 2 to 6 weeks, mapping out how you're going to efficiently utilize employees. If you are going to bring your volume, if you're going to reopen your office and have volume of 50%, do you really need to bring back all of your employees full time? Other than meeting PPP restrictions, you know, that might not be the right thing to do. And as Trey said, there are programs out there in the unemployment area where employees can possibly qualify for unemployment if they're working less than their normal work schedule. So keeping that in mind, communicating with employees. Some employees can't come back because they don't have daycare. So there's lots of different situations that employees find themselves in. So communicating with those employees and then kind of mapping that to the resources that you're going to need to reopen your office. Not being fair and transparent with your employees is probably one of the biggest pitfalls that we can fall in. When this all is over, you're going to need those employees. I've had so many practices say to me, I finally have a great staff. And now I'm afraid that I'm going to lose them because I'm not going to be able to afford to keep them because they're going to reassess everything about their work, life balance. And so, you know, really communicating with those employees and trying to take everyone's situation into consideration and figuring out how you can reopen your office with employees that can come back right away. Some employees are scared to come back. You may have to make some difficult decisions about certain employees if they're really not able to return and you need them. But I think communication is really the key on this. Keeping in touch with your vendors, keeping in touch with your customers who are your patients, and making sure that the communication is there. We don't want to ignore vendors who are asking you to pay a portion of the balance due. We don't want to upset our vendors by not ordering and not keeping in touch with them as to when you think you might reorder again. They are going through a lot of the same issues that you're going through. And so keeping those lines of communication open and making sure that you are treating your vendors with lots of respect so that they can help you while you also can help them. As Trey talked about, things are moving so quickly right now. You really need to make sure that you have the most up-to-date information, and you have to make sure that you're not getting incorrect information. A joke in our industry is, you know, if you can call the IRS, you'll get 3 different answers if you talk to 3 different IRS agents. So, you know, making sure that you're going to reliable sources, making sure that you check things twice, I think is more important than ever right now so that you are working with the best information that you can possibly get. Next slide. So in summary, before we get to lots of questions, you need to efficiently utilize the various sources of funds available to maintain practice operations. So what that means is that you need to see what money is available to you. You've got money coming in from lots of different sources. How you're going to maintain that money, how you're going to spend that money wisely is probably the most crucial thing right now until we can all get back to some form of normalcy. Regularly checking your AR, making sure that you are monitoring the submission status of the services that you are rendering right now so that you can get paid for those services. It would be a shame to be delivering services right now at a much reduced volume and then still not getting paid for those. So very, very important. Reviewing and analyze your staffing options, what your practice needs are, what financing is available. Once this government money is all gone, I think a lot of the banks have been saying to their customers, they've certainly been saying it to us, that there will be loans available, there will be increased lines of credit available. So really kind of keeping on top of that. A lot of them do not want to do increased lines of credit right now. They want to see how much money the businesses are going to get from all the PPP and stimulus money before they go forward and increasing lines of credit. A little bit self-serving, but call your accountant and call your attorney and really keep them as part of the conversation of what your plans are right now. There's a lot of tax issues that are going to affect a lot of the money that you're getting. There's some legal issues with how you handle your employees, how you handle your patients. And so it's really important to keep in touch with them on a regular basis to make sure that the road you're going down is something that they are completely on board with. And the last one and a really important one is we really need to be proactive right now. It is not going to benefit anyone, stress level or operationally, to be reactive. So try really hard to take a deep breath. Don't get consumed with the news that comes out today, but really just keep getting that information, processing it, and planning ahead, and not getting too consumed with what happened today. I know that a lot of you are waiting for PPP money, and it's very easy to get consumed with, oh, if we don't get that money, then this will happen. But taking a deep breath and really trying to move forward. So that's the end of our presentation. Trey and I are available for questions for as long as you have questions. And thanks very much for allowing us to present to you today and help you through this this very difficult time in our country's history.
Thank you, Trey and Maureen, for those excellent presentations. We appreciate you sharing your insights and expertise. We do have a number of questions that have been submitted via the chat function. And so I'm going to start back to where those began soon after Trey started speaking. So I'm sure that these first several are going to be directed to Trey, and then we will get into others that are being asked of Maureen. So we have a question about PPP loan forgiveness. The calculation limit of $100,000 annualized for an individual applies to salary. Can a contribution to 401k that is an elective contribution above the match, for example, $26,000 for over age 50, that is usually made each pay period, be included in the payroll calculation?
Yes.
And that would be for Trey.
Yes. So as mentioned, employer contributed retirement and pension contributions are added on to that threshold of $100,000. So the only thing that threshold applies to is straight compensation or salary. So yes, if you were to make a retirement match, from all of our understanding and what we're recommending clients to do, is to go ahead and keep making those contributions, and any added on benefit that's included a qualified payroll cost, like when you're calculating what's eligible and your maximum loan amount, the total payroll cost applicable do in fact include employer contributions for retirement. So yes, those would be included expenses.
Thank you for that clarification. We have a question. What about part-time employees? Are they covered by PPP if they were let go because the workload was reduced?
Yeah, so part-time employees, they're not going to count towards the one forgiveness calculation rule of the FTE qualifications. However, if they were priorly part-time, they wouldn't be considered an FTE anyway. So those costs, assuming that a part-time employee would be under that $100,000 threshold, would count, just like any other FTE. However, that's gonna not play into count for FTEs at come June 30th. But their costs would count, yes.
So if you cut pay by 20%, then many of the staff would actually make more on unemployment. Also, does decreasing salaried staff by 20% require 2 weeks notice?
So as far as the 2 weeks notice, I would have to look into that. I'm not 100% sure on the HR side of things and the requirements on that. I could even defer to see if Maureen knows anything about that, but I can touch on the unemployment thing, and that is correct. So for some folks, not all, based on their applications and what they qualify for, they might very well make more than if you kept them on board at 80%. However, you really gotta, you might be saving money and they might be getting paid by unemployment insurance that you've contributed to over the years. However, if it makes more sense as far as the practice goes to utilize that person, keep them on board, not part ways with them for any period of time. And also, the PPP thing, while we're telling you not to keep people on board just because of the PPP requirements, there's that fine line where you need to make sure, if you suspect, within 8 weeks, you're going to be back up and running at a somewhat more significant amount than you are now. It's not going to be normal by any means, but if you think it makes sense to keep them on board, and maximize that forgiveness that you're potentially, able to get from the PPP, then you certainly might want to consider keeping them on board than making them unemployed. And, the 80% mark, that's not something that you would have to do. You could cut 10% just to save some cost, where the employee would be making more, very likely making more if you kept them on at that, capacity than on unemployment.
So you may have touched on this, but we did have a question, again, related to that cut of salary. Regarding the 80% cut of salary, if you receive the PPP and cut their salaries, wouldn't you end up having to repay some of the PPP monies because you wouldn't hit that 75% of your loan amount?
Yes. So yes and no. So if your true average calculation that you're basing it off of is what you're getting the loans, given by, if you hadn't made significant cuts prior to that, and you're around that 100% of the FTEs and payroll costs that you had in that last year, in which the calculation is being derived off of, if you do make a cut across the board, even while receiving the PPP, the reason we don't want to go too significant with the cuts if you have a PPP is for the likelihood is much increased that you can still have the best of both worlds. You can still keep all your people on board and still meet those thresholds. Again, it's that forgiveness tool and the finalized forgiveness rules are really, weighing on a lot of people's minds, significantly ours, making sure that we're advising clients, the best course of action to take. And we're going by, all the hearsay and the research that we've been doing and all the resources that we have, we're fully utilizing to get our best, for lack of a better term, gut feel on what we think the forgiveness is going to look like. So long story short, to simplify that, I think you can get the best of both worlds if you really plan and manage it properly with both cuts and utilizing the PPP. You're keeping all your folks on board and, you're paying them, and it's really like free money if you utilize it correctly.
So how do you recommend managing the separation of PPP loan money to pay the highly compensated employees their share allowable under the PPP loan and the remainder of their pay due, which is owed to them?
Yeah, so really, what we're advising is based off of all this guidance, again, the SBA loan documents that you're signing. We know that the compensation has that threshold, and we know FICA taxes are not included. So what we're recommending is setting up that separate account like you would with a normal, if you have a separate payroll account, transferring the funds in when payroll runs. And, it might take a little bit of time to get the template in place, and we could even help you guys with this, but really it's looking at those folks that are over that threshold, calculating the amount of monies that we suspect would be forgivable as far as their compensation goes, and adding in any other, state and local taxes, which are likely, if you're highly compensated, are very minimal at this point in the year. But really, taking that into account and then transferring the qualified amount of PPP loan forgivable costs that we think into the operating account within, it doesn't have to be right that second. We would think like a 24-hour grace period. So if your payroll hits on a Wednesday and you calculate what's going to be deemed eligible for forgivable amounts, and you take into consideration the salary maximum thresholds, transfer those amounts within like the next business day or two, just so there's a clean trail there to make it easily traceable to, okay, here's our PPP account, here's what we transferred in, and this is for payroll. And then come forgiveness time, you'll have the appropriate calculations, payroll registers, etc.
Are payment to independent contract providers included under the forgiveness?
They are not. And this was the first thing, personally as a CPA firm, something that we were admittedly struggling with, before the first go around, and up until literally, 8 p.m. that night before the quote unquote go live day of the first tranche that was a very suspect area, where we were all scrambling around. Some banks were asking for 1099s and, 1099 comp people that weren't on your staff, but you were regularly paying them for services as an independent contractor. Did they count? Again, the majority of banks were portraying it that they did. And the way the original laws were written, it looked like they would include for both, calculating the maximum loan you can take and forgivable costs. But the answer now is no. There's a lot more clarity on that. It's, very straightforward in the FAQs given out by the Department of Treasury and Secretary Mnuchin. So no, they do not count for either usable costs or forgiveness.
Thank you for that explanation. So as long as you are back to prior FTE count on June 30th and you fulfill other criteria, is your PPP forgiven? So in other words, you don't have to have everyone back on day one?
That's correct. So it's both, it's to incentivize the folks you have on board and to bring back the capacity of the folks that you've maybe laid off, furloughed. That's not to say it even has to be the same employees that you laid off. If it just wasn't a fit, now's the best time to bring in, employees to fill that role that are better, forward looking for the practice. As far as we understand, again, on the uncertainty of the forgiveness, is that as long as you get your FTE count back to where it was by June 30th, you would satisfy that portion of the forgiveness calculation. Again, it's a gray area, but everything we've seen, you get that target number back by June 30th and you're good.
Thank you. So this question relates to the cost of supplies that have needed to be acquired. We've spent a fortune on COVID-related supplies from other than our regular vendors. Is that covered by HHS funds or PPP funds?
So it would not be covered for PPP, but it possibly would be for the stimulus funds, correct, Maureen?
Yes, I think so. I think that the rules about the HHS stimulus money is that it's to be used for keeping your practice operational during this period of time. And I think that would fall under that completely, because it's not just when we're closed, it's as we reopen. So I think that would come under the stimulus fund bucket of money that you would be tracking.
So there was also a question that was submitted to us about whether or not the medical society might have access to PPP for members, PPE for members. We actually are in the position like you that we continue to look for vendors and share that information. Certainly price gouging has been an issue, and so we're trying to vet vendors that are not doing that. And so we will continue to update our website with that information, as well as send that out in e-news. So just look for that information. So this question is about reporting requirements. What are the reporting requirements for the stimulus monies? What kind of documentation do you need to maintain?
So as far as the stimulus goes, I'm not sure as stringent reporting requirements are needed. As Maureen stated, the purpose of it is to keep yourselves afloat and manage, based off of lost revenues from COVID, as long as you can attest to, losing revenues, which is easy to do, and, not commingling it with other funds. So if you have PPP and stuff, you can't double dip and use stimulus funds for those same payroll costs.
Right.
So that's thrown out of the documentation, hence another reason why we're recommending multiple accounts, bank accounts, to kind of keep those segregated for both, reporting requirements and just so you're not using certain funds for things that you shouldn't be. So, that's the most simplified answer we can give on that. I don't know if Maureen has anything to add on that.
To make it really simple, I think you put the PPP money in a separate account and you account for every dollar you spend from that account for payroll related costs, rent, utilities, mortgage interest. That's what that money is for, and you should be able to account for every single dollar you spend. One of our partners actually recommended that you set that money up as a liability account, completely separate, and work down that money as you use it for those required expenses. I think for the stimulus, it's exactly the same thing. That really is for operations, lost revenue. So again, you put it in a separate account. Maybe you set up a liability account, you work it down so that if the government came to you tomorrow and said, show me how you spent that money, you literally would print out the general ledger for that account, and it would show every vendor that you paid, or it would have a backup schedule that would show the vendor for every dollar amount that was taken out of that. I don't think you can be too careful on this. We don't know how much of an audit function there's going to be on this, but I will tell you, I read that the HHS stimulus money allotted a lot of money towards audit and review. So we need to make sure that we keep that in mind and we keep everything as separated and detailed as possible.
And you would, go ahead, please.
I just wanted to jump back in real quick on the last question. I think I neglected to answer the part about what is forgiven. How is that treated? So as of now, federally, that's non-taxable debt forgiveness. Maryland hasn't yet confirmed one way or the other because, you know, the state runs their own state tax laws. So they might, you know, join the party on that. And I think that they would, just like they kind of soonly followed the IRS for extending tax deadlines, et cetera. So the big question mark is, and I'm glad this question came up because we forgot to mention it in the presentation, is, okay, it's tax-free debt forgiveness, but the deductions, the expenses that you're using those expenses for, are they deducted? So this is another gray area where there's really not, unfortunately, any guidance on one way or the other and how the tax treatment is going to work. But one would think, you know, especially in our field, if they're granting that debt forgiveness being taxable, non-taxable, then we think that you're going to still be able to take the deduction for those payroll costs, et cetera, because if they forgave the debt and didn't let you count the deductions, there's no benefit. It's a wash. It's less revenue, but it's also less deduction. So we're definitely siding on the side that you'll get to both defer not ever recognize any revenues on those PPP forgivable funds, but also take the deduction. So you're getting the best of both worlds, and it's truly then non-taxable.
So we can certainly feel this practice's frustration. This practice applied for PPP 6 weeks ago and haven't heard one word or received any money. Is there any advice, as there is no one to talk to and emailing has been ignored? They've also called the local bank and asked to speak to the manager, which has been futile. Do you have any other suggestions for trying to find out whether or not that those monies and others have been approved?
Unfortunately, you know, being resilient and trying to get through to that bank is really the only option right now. Admittedly so, you know, some banks have been much better than others. Certain specific, you know, individual lenders have been more helpful than others. But really what it comes down to is some banks were more prepared. Some banks are handling the rush and the high volume of lending and all of the data to get together a lot more, you know, than others. As far as applying 6 weeks ago and not hearing, that is definitely alarming and concerning. And unfortunately, if you go to apply with another bank, you know, at this point, unfortunately, most banks are not going to take on new clients at this point in the game because they have both a backlog and a pipeline of existing folks that missed out on the first tranche. And understandably so, like any business would, they have to prioritize their current client base first. And by the time they get through that big pipeline and some of the big banks that missed out and weren't as prepared as the small local community banks, because honestly, the community banks did, you know, much better than the big banks like the BOAs and all, the first tranche for a couple different reasons. And it looks like, you know, they got a good head start on this tranche as well, as really being able to, you know, dish in as many applications as they can. And they're just more, you know, capable of performing, you know, and getting these funds closed. So unfortunately, I would really try keep, you know, call that phone off the hook. Try to get a hold of somebody at the top of the ladder. I know specifically on a mutual client of Maureen and I's, she, you know, we got involved and she reached out to one of the VPs of the bank and has been resilient in, you know, is there any update? Please keep us updated. The client's in limbo. So if you have any kind of connection or, you know, any kind of thing that you feel like you could, you know, put the music in the right person's ear so that they get on top of it and give you an answer. Like, where is this really at? We've been told it's in review. We're waiting on the SBA. In reality, if the SBA has it, you should get an approval within 24 to 48 hours, or an E-Trans numbers. That's the magic number that if you get that, you're golden. And it's just a matter of getting those final loan documents signed and over to you. And then as soon as that's done, within 72 hours, usually 3 business days, you have the funds in your account. But really, the big magic ticket is getting that E-Trans number. So unfortunately, I wish I could give better advice on, or a better answer on how to pursue this non-responsive bank. But really just keep trying. And what I was getting to mention is, even if a new bank would take you into consideration, there's a question on the application and in their onboarding: do you currently have another application in process? And that might hold things up. So there's a lot of things working against you, unfortunately, as there are many other folks out there.
So this practice is a concierge practice, and I think this may go to Maureen. I think I read that if a patient gets a COVID diagnosis, we can't continue to collect member fees. Is that accurate?
So I don't know the exact answer to that question. I was just reading the chat while we were answering the last question. I don't know, and I think that I have not read where this would affect a concierge membership fee. But if you are a concierge practice and the patient pays a membership fee for the executive physical and maybe a certain number of visits a year, but then you bill the patient's insurance company, to me, that visit is outside of what is included in your concierge fee. So that's just my best guess. I can do a little bit of research on that after we end our seminar, but I don't see that as being completely exclusive to each other, is my best answer.
So this is Susan. I have somewhat of a related question, because as we have heard about COVID positive patients not being responsible for for copays, my question really is, so who's going to make the physician whole? Physicians count on those monies for just general operating their bread and butter. And so is the health insurance company going to pay the physician for that, and the health insurance company then gets paid by the government? How does that work?
So again, we don't have a definitive answer on that, but we researched this a couple of weeks ago when we put our telehealth grid together. And the conclusion that we came to was they made it sound like the patient was not responsible, so therefore the insurance company would pay the visit in full, whereas usually they subtract the amount of copay that the patient's going to pay. For Medicare, it does not look like they're going to pay in full, and it looks like you can waive the copay for the patient. You have the ability to do that, which normally you don't have the ability to waive the 20%. Now, if a patient has secondary insurance, this whole thing is moot. But if the patient does not, then you have the ability to waive the copay. It doesn't necessarily say you have to. So that's Medicare. Medicaid is very, very fuzzy about this, so we are unsure how to answer that one, but most of the time Medicaid patients don't have a copay anyway. So that is the answer to that one. For the commercial payers, it is our understanding that the insurance company is supposed to pay the allowed amount in full. Some are, some aren't. But what we did find was, if you don't use a COVID diagnosis code, they will not pay the whole visit. So if you think about this, if you're seeing a patient who is suspected of having COVID, you send the test out, you bill the service, you don't know at that point in time whether the patient is COVID positive or not. So as usual, it is the physicians that are going to take the hit on this if you're not watching it closely. I personally, if I had a COVID patient, or I had a patient who was suspected of COVID, who had all the boxes checked for the symptoms, I would put that COVID diagnosis on there and I would bill it that way. But this is a gray area, and not to be disrespectful, but the insurance companies aren't going to pay money that they don't want to pay, that they don't have to pay by law. So you really need to keep an eye on this as to which services you put a COVID diagnosis on and how they get processed.
Thank you for that explanation, because we've been mulling that over in the medical society as well, and very concerned for our physicians.
Yes, absolutely.
So next we have an HHS loan question. We have a legacy company that is closing down. We do not bill anything from this or pay any employees. We received HHS stimulus funds. Can we keep them?
So my answer to that would be that you have to look at the definition of what those funds are for. And those funds are for that tax ID number, and they are for you to keep your company practice going. They're for lost revenue, and they are, to keep the practice in a status where they can reopen. Some of it depends on how long this legacy company has not been billing. Sounds to me like it's probably somewhat newer, because that money was based on 2019 revenue, Medicare revenue. But bottom line, I think it's a little risky to keep HHS stimulus money if your organization, your tax ID number is not billing Medicare anymore. That's my
Agree with that.
gut.
All right, so any crystal ball indication that the 8-week usage of PPP dollars may be extended to a longer period?
So this is a fairly, understandably so, common question. There's really no definitive answer, but the longer this thing trickles out, you would think that there's a couple different things they could do. They could manipulate or change the way that the current programs are structured, by example, extending that out to, let's say, 10 or 12 weeks, or they're going to come out with yet another stimulus package with other similar offerings. As of now, there's been no guidance on an extended 8-week period at this point. But that's not to say it can't happen, because as we've fairly mentioned several times, the government likes to surprise us. So I can't say that I'm leaning towards them doing that, but it's not impossible. So sorry, I can't give a clearer answer, but it's definitely possible.
So we have a couple questions about EIDL loans. For those loans, is the first $10,000 forgivable for everyone, or only those who don't get the loan?
So that's the 10K is the same for anyone that applies. The 10K, I believe, is only going to come to you if you are applied, and it's just going through the process of getting the funds dispersed. So they're not going to just receive the application, see that you applied, and throw you 10K. That's not how it works. The application has to actually be reviewed, and it's just an advance of the monies. And that 10K is an upfront grant that's not to be repaid. So those remaining funds, that's going to be the repayment term. I don't think, at least I haven't seen, I really personally haven't had too many clients get the EIDL because they've been able to get the PPP. And the EIDL, again, as I kind of hit on, has its pitfalls, such as, personally securing the loan. So anything 25K or more, you have to personally put collateral up, whatever collateral is there, to secure that loan. So there's a lot more risk with it. The interest rates, I believe, are 3.75% for small businesses. So, again, that's not as cheap money, but again, if that's what you truly need, then you're going to do it, whether you need to, whether it's collateralized or not. But I have not seen or heard of a 10K just because you applied and then nothing else. The only other 10K grant that you may be confusing it with is the Maryland Small Business Emergency Relief Grant, which is a 10K, it's max 10K grant to be used for working capital, not to be repaid. But again, that's 50 employees or less only. And I think by now, I know they replenished both that and the Maryland Small Business COVID Emergency Loan Fund, also for only 50 and under, a couple times, but just as quick as they replenish it, it's gone. So I think the original state fundings that were out there are probably gone. Similar to some of you guys hopefully got the opportunity to apply for and get the layoff aversion funds. We didn't really hit on those because they've been exhausted. But those were funds that were put in place, fully non-repaid funds. They were reimbursements for you and increased costs to either promote, telemedicine, remote work, et cetera. But that's kind of like pointless to talk about now because they've been gone since pretty much as soon as they announced them.
All right, so there is a somewhat related question about EIDL. This particular physician said, we did not get the 10K yet, which we heard today should have been within 72 hours. Any recommendations for how to follow up on this, or is this the same situation as you were describing previously?
So it's somewhat similar. I have had a couple clients, like I said, I haven't had too many do the EIDL route because they've been fortunate with other sources of funding. However, that 3-day thing is something that they like to put at the forefront before things really got this crazy and their systems started crashing. So I'm not sure how long ago you applied, but if it's been a week or 2 weeks, I would definitely be concerned and reach out to the SBA directly. It's hard to get a hold of them, but keep trying. They will help you. I've had clients, wait on hold for an hour or so, but, they eventually do help them and give them the answers they need. And someone was actually checking in. One of the clients was checking in on this 10K. And they said, unfortunately, the high amount of volume is still in review. But once it gets to a review and it's actually in processing, that's when they advance the 10K. So it's not as easy as, oh, I submitted it online, I should have it in 72 hours. It's 72 hours from when they really, truly, get through that review stage. So that can take some time. So it is a bit misleading. So I'm glad that question came up.
So this practice asked for clarification again about, did I understand you correctly to say that part-time employees are not included in the FTA counts for PPP? In other words, we have heard that maybe part-time employees can be put together to be an FTE. What's your clarification on that?
Yeah, so that very well might be the case, and honestly, I haven't. That's a good question. I haven't really, seen that in any guidance. I haven't seen that specified in the FTE counts. Again, when the final guidance comes out on forgiveness and what truly is considered an FTE forgiveness purposes, I'm sure they'll say, can people be pro rata and combined to make an FTE? My original thought is no. The funds that are being used for them will count, but as far as FTE counts, I think they truly are incentivizing you having FTEs, not, counting up folks that somebody might work 20 hours, another one might work 20 and making one. I think they're working against that kind of thought process, but nonetheless, it's not impossible. So, that's something to definitely keep an eye on as more guidance comes out.
So we had a question about telehealth. Are items that may need to be purchased to assist in telehealth, for instance, a computer, something which could be applied to grant funds?
So those would have been ideal for the layoff aversion funds. Again, that's, putting salt in the wound if you couldn't get those. But that's what those were for, increasing your ability to both work remotely for your staff and keep people, the layoff aversion is exactly what it sounds like, keeping people employed and being able to work remotely and fulfill their jobs at their normal capacity. And the other thing, obviously the main thing for medical practices was the telehealth, being able to implement a system to be able to, fully take advantage of that. So that's the layoff aversion things. The grants, so if you were able to get the Maryland grants or the EIDL 10,000, that's kind of able to be used on anything. So the answer would be yes, you could use that for that. And then if you got the HHS stimulus, I mean, that would definitely qualify as well for an eligible cost for that. So you got a lot of different options there where that would certainly fall into an eligible cost, just not the PPP.
I might also encourage this physician to look into the Maryland Healthcare Commission because they did have some small grants available for this purpose, and they may not have all been used yet. So you might go to mhcc.maryland.gov and take a look at that. So there was a comment made for everyone that Square and PayPal are offering PPP as well. So that just may be a way to go. This person asked, can PPP funds be used for fulfilling unpaid 2019 profit sharing or safe harbor contributions?
So this is another area, right? Because where we're trying to figure out the best answer, because this is going to be a common theme, right? The tax deadlines have been backed up. So you have those 2019 employer contributions that you may not have made yet, and you likely have not made yet. So the question is, can we do this during this PPP period and have those count? I can see yes and no. Some folks think that they will count. I do feel like, if you owe $150,000 and you pay that $150,000 and expect to get that fully forgiven, I just don't think that's going to work. So I really can't definitively answer that. If it's something reasonable and you're making your safe harbor match like a 3% or something, I can definitely see that. But as far as like a full-on profit sharing match where it's a couple $100,000 for some of the practices out there, that's not going to fly. I would not think.
So we have a question from a physician about that they did not actually separate the funds that were received from the first stimulus money. They already had given a paycheck from the regular account where the money was deposited. So how do I fix that?
So for all of this tracking, again, it's not anything that's mandated or required. It's simply a recommendation from us for the ease of both tracking and when it comes time to provide documentation and validity for the expenses, it makes that a little bit easier and a better, cleaner trail. But again, there's some clients that whether it just doesn't make sense or they don't personally want to do it or their bank's actually advising, not the need to do it. There are clients out there that have everything together and it's really just comes down to internally tracking, whether it's a spreadsheet, et cetera. But, for PPP, the payroll stuff, really at the end of the day, if you can show them the bank statement, right, that you paid 2 months of medical premiums and you have your payroll registers for the employee portion, right, because that doesn't count, and you have the total premium invoices that you paid, stuff like that is going to be more than enough to support the cost. And to go with payroll registers, you're going to have all the support there. You're going to see the funds coming out of the bank accounts. But nonetheless, it definitely makes sense and is advised to create, an internal tool, especially if you don't have separate accounts, to kind of keep track of that.
Thank you for that clarification. We also had a physician to let us know about the telehealth grants, that there are some from the FCC. So you might want to check that out as well. So we have one final question that has been submitted, and it's pretty specific to this individual, but there may be others out there that could benefit from this information. If I'm a single member owner of an LLC, can the PPP money, if I ever get it, be used to help me to cover my lost income? I don't use 1099s, a K-1, or a W-2 for myself. I only use a Schedule C at the end of the year to determine my income. Thank you very much.
So as far as the independent contractors go, there are a lot more limits. I want to say that they can use up to $20,000 to cover lost income on behalf of just themselves if they're a single member LLC. But I personally have not. Again, just to jump back to that resource center we have, I would check that out on our KatzAbosch site. It's a great resource center. It'll take you to your tax relief wizards that were mentioned in the chat by our marketing director, Sarah. So that's definitely something I would advise checking out because it can be more specified to your individual requirements and situation. The independent contractor or the single member LLC thing hasn't crossed our path quite too often, at least in my area. That's not to say I can't get you in touch with someone at our firm that has dealt with a lot of these types, because I certainly can. If you want to send me an email to help you out specifically, we're more than happy to do so.
All right, and we actually did have one final question. Was the CMS Advanced Payment Loan Program stopped?
I'm going to defer that one to Maureen.
So there was something in the news this week that they were going to stop it because they felt like the practices were going to need the money later on versus now. I didn't see a definitive word on that. We can certainly look that up for you, but it really was more of a discussion than a directive because they didn't want everybody to grab all the money up front and not have any avenues for later on. But I can certainly look that up. If you want to give me some contact information, I can get back to you on that, or everyone for that matter.
Yes, I think that would be helpful to include in our follow-up emails. So if you could share that with us, that would be very helpful. On that topic, having gone through Hurricane Katrina before I moved to Maryland, this same type of program was used for physicians at that time. And unfortunately, what did happen is that physicians used it to try to address all of their current expenses and their lost wages. And then there were certainly cash flow issues that occurred later on because even though they were billing, they weren't getting any additional payments. And so it became a real problem. So we've been encouraging physicians to be very careful about their use of those resources at this time. So we really appreciate everyone joining us today. We hope this webinar has been helpful. You will receive a follow-up email, which will include a feedback survey. We hope you'll share your observations with us. We will also provide contact information for our speakers. And once again, we'd really like to thank Trey and Maureen for collaborating with us to offer this important information to our practices. We've already seen a number of people in the chat window to tell us that it's been very educational and very helpful. And so we really appreciate your contributions today. So we would encourage you to look forward to your emails on Sunday mornings about additional webinars that we will be conducting, and to continually check out our websites, montgomerymedicine.org, as well as medchi.org, for updates on all of these items. So again, thank you so much for joining us. We hope you have a good rest of your day, and thank you for your commitment to our patients in our community. But you need to stay well so you can take good care of them. So thanks so much.
Thank you.
Thank you.